Hey, good morning. I'm Robert Howk with Howk and Downing, and I have Amanda with me from Kuhtz and Diehl. We're talking about insurance products. A little admonition at the beginning, kind of like a little warning thing we have to put out to people. And the show is not intended to be legal advice, and should not be taken as legal advice. Every case requires specific facts and history and a formal agreement for service. And please feel free to contact us if you have any need for legal advice or interested in seeing if we can help you. I'm having trouble talking today for some reason. Also, the appearance of other business and service providers on this program is not an endorsement of that business or service. Every need or problem has unique issues that need to be addressed individually with the service providers, and not every service provider is a unique fit for each problem. We do bring people on the show that we have faith in, but again, you might have an issue with them. It can be a personality conflict, whatever. You need to find somebody who's a good fit for you. We feel these people that we bring on the show are a good fit for the majority of the people that are out there. So, Amanda, why don't you start out and introduce yourself and tell us a little bit about what you do.
Okay. Well, my name is Amanda Hargis. I work for a local insurance agency, Kuhtz Diehl Insurance and Financial Services, and our specialties, and my specialty really is Medicare products with seniors, life insurance, long-term care, and final expense products.
Okay. So that is something that you and I were talking about earlier, is something that fits in with our practice. When we do estate planning, there are certain times we will recommend insurance because it's absolutely invaluable later on. We have a family member who we talked to 15, almost 20 years ago now, and got them to get long-term care insurance, and between his retirement check and the long-term care that he gets from Public Employees Retirement System policy, all of his expenses are covered. Right. He's got very, very little out of pocket, so it preserves the estate for later on. So let's talk a little bit about the Medicare insurance enrollment. Is a very specific product, very specific time,
right,
and that you can apply for it and what you can use. So why don't you explain it, because that's not my area.
No problem. It can be very confusing, and we run into that a lot with our senior clients. There are very specific times during the year when you can do your enrollments. The most commonly known one is the annual election period, which just happened, and typically runs from October 15th through December 7th. What a lot of people don't know is that immediately following that, from January 1st to February 14th, is an enrollment period called the Medicare Advantage Disenrollment period. And what that is if a member is unhappy with their Medicare Advantage plan, their Medicare HMO plan, they can take this time to disenroll from that plan and go into a standalone prescription drug plan, and even possibly apply for a Medicare supplement plan as a different form of coverage for themselves.
Okay. Well, you mentioned two types of insurance, and I know because I have reached that age. And I have a Medicare supplement plan, which I have obtained through Robert Diehl, one of your, I guess, your two principal partners in the business. And I also have a prescription drug plan, and they're separate.
Correct, they are, and that's where it can get a little confusing for members. Is there are several different ways to obtain additional coverage to your original Medicare benefit. Medicare supplement plans essentially do just that. They supplement that original Medicare benefit. So Medicare pays their portion of the claim, and then the supplement plan will offset the excess cost. But those plans don't have coverage for prescriptions. So you would get a secondary plan under a prescription drug plan to cover those prescriptions separately. In addition to that, there are Medicare Advantage plans, which basically provide all of that coverage kind of wrapped up in one plan. It'll cover the prescription and the medical portion, but it's typically in an HMO style plan, so where this Medicare supplement has a little more flexibility of providers.
Right. I've noticed that with my plan, I have my choice of doctors where I go. I'm not restricted to their panel list of doctors, and the coverage has been very good. I had a surgical procedure a year ago, last September, and I think my total bill was $50 for the surgery. Medicare paid their part, as you said, and then United Healthcare paid all the rest, except for $50, which I didn't fight with it. It wasn't worth the effort to fight over a $50 bill. There's a number of insurance plans that, first of all, to get Medicare, there's age requirements, correct?
Correct.
And you have to be how old to get the Medicare?
Traditionally, you would be 65 years old, and that's when you would qualify for your Part A and Part B benefit. However, if you're disabled for 24 months, you can actually apply for and be qualified and eligible for Medicare prior to turning 65. I have my own personal experience is my aunt is pre-65 disabled, so she's in her 50s and she's on Medicare.
That's an important fact because Medicare is a great coverage. One of the things that we have seen for a while because of a family member, not me, but another family member that was on Medicare, when he had to change doctors for a while, there was a big problem finding doctors that would take it. Now it doesn't seem to be that problem. Are you aware of that and how they can fix that if it's going on?
Right. So with the Medicare Advantage plans, they are all network based. And here locally in Fresno County, we have about 4 different provider networks to choose from. So the provider network base is rather large. Typically, under most of the plans, you'll have access to community medical providers. So all of the doctors within the community medical providers region, which is a large amount of doctors here locally in Fresno County. And then also there are plans that have access to St. Agnes and the St. Agnes Medical Group providers as well. So through the plans here, you'd have access to all of the local hospitals and a very large network of providers here.
And during this process, medical providers that we have relationships with have always accepted Medi-Cal and Medicare, where Dr. Baptista and his son, Dr. Baptista, Lewis and Juan, and they're very good, and they have a great foundation, the Baptista Foundation, which is a pay-it-forward kind of a foundation. But they will always take those kind of patients, and we had a challenge, like I said, for a while, getting people into providers, but it seems to have cured and cleared up at this time.
It really has. A lot of the carriers locally, Humana, Anthem Blue Cross, some of the carriers that offer, there are very specific plans for people who have Medicare and Medi-Cal. And those are called dual special needs plans. And they've worked really hard here locally to add more doctors to their panels, to provide greater access to care through primary care doctors, specialists. In addition to that, they have access to other benefits like transportation, some dental and vision benefits as well.
Okay. And that's something that I meant to inquire about. Now, I had gone to my eye doctor, but if I go to the ophthalmologist, they cover it, but I go to the optometrist, I don't know if they cover that. I don't know if there's a difference. Also, you mentioned something about dental too. Is there a dental coverage for seniors on Medicare?
There is. A lot of the Medicare Advantage style plans will actually have a dental benefit rider that they can attach. Some of those are an additional monthly premium, but it's typically between $12 and $30 a month. There are also standalone dental plans available for seniors if they're interested in those. And working with a local agent, they can help you find the providers. They can show you the different plans that are available to them.
Well, that's a big issue for seniors. Dental coverage is awfully hard to get. I know in my little plug for Fresno Sunrise Rotary, which I'm a member of the club, meets every Thursday. We're at the Elbow Room at 7:15 in the morning. We have a dentist in the group, and Dr. Dennis Falk, and I've talked with him about it, and a lot of those dental plans he's not thrilled with, because he said they don't pay much and you have to be on there for a long time. And I noticed that with coming in with the Medicare and the Medicare supplements, there was no concern about my prior conditions. There was some. They gave me a what we call a capacity test in our business. They wanted to see if I could remember things and if I essentially knew what I was doing. And outside of that, I didn't see a lot of pre-qualification things. Now, there's been a big push with the Affordable Care Act to eliminate the bias against pre-existing conditions. Is there a bias on pre-existing conditions with the Medicare supplement plans?
With Medicare supplement plans, there are two options. So with a supplement, if you're just coming into Medicare for the first time, typically that's called your open enrollment period, which is the first 6 months of becoming eligible. There's no underwriting questions at all and no pre-existing waiting periods or anything applied to it. You can get into the plan without any questions asked. After that, you may have to go through underwriting. However, the underwriting is pretty limited. Some carriers are ask a few more underwriting questions than others. A good agent knows kind of where to look to place you. And then there can be situations that arise during the course of having Medicare or an Advantage plan that may trigger what we in our industry call a GI, or a guaranteed issue period. For instance, if you move from one county to the other, or move in or out of state, that triggers a guaranteed issue. So you can enroll into a Medicare supplement plan without any underwriting questions.
At another state. So if somebody was on Medicare moving here from, say, one of our neighboring states, Nevada, for instance, how long would they have in that period of time to get enrolled in California?
Typically, they want to see the enrollment happen within about 2 months of the move. You can start that process before you move if you notify Social Security of your new updated addresses. Or once you have moved and established an address, you can do that within the 2 months of that move.
We're coming up on break time, right, Mike? Okay, go ahead. Okay, I'm back with Amanda from Kuhtz and Diehl, which is I'll let you say that's all you do.
We're a local insurance agency specializing in Medicare insurance plans, life insurance, long-term care, and final expense policies.
Okay. So I noticed that one of the things you said that if you live in Madera, Kings County, there may be some differences. You want to explain what that means for these people?
Absolutely, absolutely. So every year during the annual election period, members who are enrolled in Medicare Advantage plans will receive what's called an annual notice of change letter that lets them know if there are any changes happening to their current policies. I find more often than not, because they get so much mail, that sometimes those letters get lost. Yeah. And what's important to understand is if you live in Fresno or Madera or Kings County and you were on a Humana Medicare Advantage plan, you were required to make a plan change coming into January of this year. They made some changes to their old plan, and the old plans actually terminated on December 31st. And if you haven't been to the doctor yet and you haven't made a plan change, you might not know that you actually don't have coverage right now. So if you live in one of these counties, it would be a really good idea to make sure that you reach out to your agent, whoever maybe helped enroll you in the first place, or a new agent. We have plenty of agents even within our own office that would be happy to assist in that, just to make sure that your coverage is still intact. You have essentially until the end of February. This year we're a leap year, so until February 29th, to make a plan change and get yourself re-enrolled in coverage. If the 29th of February comes and goes and you haven't done anything, you may find yourself without coverage for the rest of this year.
That seems like a really draconian kind of a concept, but it's true, and they hold, I know for a fact, because dealing with the elderly people that we deal with every day in our practice, I see so many of them that end up without coverage because they don't, as you said, there's so many things that come in the mail today, and a lot of our senior citizens don't. It's not that they don't understand what's going on, it's they get that information and they set it down and they just forget to act on it.
Absolutely, absolutely.
And then once they don't have that coverage, trying to get insurance coverage for medical reasons after that is really difficult. I also understand from talking recently with some people that in order to get on the Medicare, I guess it is F plan, you have to already be enrolled, and then you can change. But getting enrolled is a specific time frame again.
Right. Yeah. When it comes to all of these plans, there are very specific time frames to enroll. The Medicare Advantage plans and the prescription drug plans tend to have much more restrictive enrollment periods, and that's what we're seeing with that Advantage plan in the Kings and Madera counties. Is we're kind of getting down to the wire on being able to get elected into a plan if you were on a plan that terminated. With the supplement plans, if you don't have other coverage in place, you're always welcome to apply. However, if you're outside what would be a guarantee enrollment period for yourself, you may have to answer underwriting questions. And if you can't get through underwriting, you may not be able to get into a plan right away.
And say they do get through underwriting, but the policy is very expensive. When the open enrollment time comes around again in October to, I've already forgotten what you said. Within that time frame that comes towards the end of the year, can you then enroll without healthcare questions?
Absolutely. If you're finding that your premiums on your supplement side are just a little too much to handle, which can be difficult if you're living on a fixed income, during the October 15th through December 7th annual election period, you can enroll into a Medicare Advantage policy without any underwriting questions. Really, the only thing they would consider in underwriting is ESRD, which is end-stage renal disease. You're basically on like kidney dialysis waiting for a transplant. There are other federal programs available to assist in those circumstances, but outside of that, there's no underwriting.
What becomes crystal clear out of this is like doing estate planning. Insurance requires somebody with specific knowledge in that area to work with, because I see a lot of people that get estate plans, the cheapest place they can get it, and then the spouse dies, and then they come to us and say, what do I do? And we find out that the plan doesn't work. It's just not effective. And unless you do go to somebody who has knowledge in these areas, you don't do it. If you're turning 65 and you're coming up on this, one of the places people can go, and in fairness to the thing, they can go to the local HICAP agency.
Absolutely.
And HICAP, which is HICAP, and it's health insurance. I can't remember the last part of what it stands for, but it is a free service that is put out. It's part of the Fresno Madera area Agency on Aging. They help sponsor that. It's out there. It's part of the Ombudsman program specifically, and it is available. You can go sit down with them. Although they don't sell insurance, they can explain some of this to you.
Absolutely.
I went through it just to see what it was like, and I didn't get as much information as I got with going with a local agent. But again, the agent is selling something. HICAP sells nothing.
Correct.
So it is available. Let's talk about something else we had talked about earlier a little bit, and we'll touch on it for a little bit because it's a very, it's not so much complex as it is a necessity for people as they age, is to get long-term care insurance. I know that I carry long-term care insurance.
A member of our family carry long-term care insurance, so we triggered it. And between the retirement check that comes in and the long-term care insurance and his health insurance, pretty much everything is paid for, and it preserves the estate assets.
Yes.
So why don't you explain the different types of long-term care insurance that you folks have?
Well, for the long-term care insurance, the nice thing about being an independent broker like we are here at Kuhtz Diehl is that we have access to all of your top-rated long-term care companies. But there are really kind of two different types of long-term care. There's traditional long-term care insurance, and then there's kind of the non-traditional. Traditional long-term care insurance, a lot of the opposition to it is you have to use it in order to reap any benefit out of it, and some people are opposed to that. However, I believe that firmly that those are the best type of long-term care plans available. They typically have some sort of a concierge service that helps set up any sort of care that's needed. They'll help kind of guide the family through the process of determining whether they just need a little in-home care initially, so they're not using all of the benefit right away, and helping to kind of drag that benefit out as long as possible. If you're opposed to the use it or lose it platform of long-term care insurance, there are universal life or whole life policies available where you can add a long-term care rider onto the end of it. And what that does essentially is, say you get a $250,000 universal life product, and you add that long-term care benefit rider onto it. If you have to trigger the long-term care benefit, it triggers the same way once you can't perform 2 of the 6 activities of daily living. Then you would draw from the death benefit as your long-term care benefit. So
In a case like that, is the benefit that's being paid out for long-term care limited to the face value of the life policy?
it is limited to the face value of the life policy, but it is there as something, which is better than nothing. And you can basically with those, if you bleed, you can bleed out the whole policy and use it, and then upon death there wouldn't be anything available. Some of them will have additional riders so that there's at least like a $50,000 death benefit left behind on that policy. And sometimes with those, if you apply as a husband and wife, and you don't use it, you can actually allow the spouse to pull from that long-term care policy if they need to.
This is something that when we're counseling people on estate planning, we like to see people in our office. Of course, everybody should have some type of estate plan put in place.
Absolutely.
Even if it just means us coming in and doing simple powers of attorney for you for health care and financial responsibility. It's somebody to speak for if you can't. But there is a time when we tell people we absolutely feel you need to look at this. And that's generally in the late 40s to early 50s is to get that policy benefit.
I absolutely agree. That's when your rates are going to be the most reasonable for those types of policies. You can lock in a good rate. You typically aren't experiencing the health conditions that would eliminate you via underwriting for those types of plans. And that's typically, discuss it with our Medicare clients. The older we get, the more we break down. So
Yeah, I know.
if you can get in there before you really start breaking down and you're just doing your oil changes.
Yeah, it can be a big benefit.
Absolutely.
And I've seen that, and we personally, my wife, who's my law partner as well, we both have long-term care insurance, as well as we insisted a member of the family get it. And as I said, it's been an absolute godsend to have that in place. Sometimes I've seen cases where we've had a little bit of a problem getting it in place, and we'll talk about that more when we come back off the next break in a few minutes here. But generally you have to have, there's a waiting period or deductible time, which has to come in. So it's important. We tell people when we're doing the estate planning, it's important that you apply as soon as you meet the eligibility requirements to having those 2, they're called ADLs, average daily living events that you can't do. Like you need somebody to fix your meals and you can't do your own housework or laundry. So we're going to go ahead and take a break now. We'll be back right after the break. All right, I'm back with Amanda from Kuhtz and Diehl, and we're going to continue our talk on long-term care insurance and why you should really have it and get it as soon as you can. A practical at the time you turn 40 to 50, while the rates are still low enough to do it. There is an advantage in the fact that Medi-Cal allows you to keep extra assets on a dollar-for-dollar basis on what's covered by long-term care insurance, where there's the Medi-Cal rates are changing, so I'm not going to give them to you. I haven't got the new ones yet, but they change every year at this time of the year. They'll come out shortly. And it allows you to keep, like, say, dollar for dollar. As an example, if you had $150,000 in assets that were over the limits of Medi-Cal, and you had a long-term care insurance policy, paid out that $150,000, you would be able to keep all the $150,000 and not have to spend it on Medi-Cal. You had mentioned one of the websites, which we won't mention the company name, that calculates average cost of in-home care, and it doesn't take much if you realize if you're paying somebody long-term care $15 an hour, 24 hours a day, 7 days a week, 365 days a year, that is an incredibly huge chunk of money.
Absolutely.
And the long-term care is not going to cover all of it. That's where it behooves you to talk with your insurance agent, to talk with your estate planning attorney, to figure out when it's best to trigger Medi-Cal benefits, or if your estate plan is set up in a fashion that allows you to do that. Not all of them allow that, because some of these people, as they age, then they lose their capacity to make decisions, and if the powers of attorney aren't done correctly, there's nothing we can do.
Right.
That goes through
Right.
it. So I know the Department of Insurance has a website that has, it was, I think, 6, I think there's only 5 now, or it was 7 now, there's only 6 providers that if you have a policy with one of those companies, they will allow that Medi-Cal offset. But there are a number of other companies out there, so why don't you talk a little bit about what you guys do and how that affects it?
As far as the long-term care insurance, we work with a large broker house for the life insurance. So for all of our life insurance long-term care products, so we have access to companies like Prudential, Nationwide, Genworth, all of your top Comdex rated carriers who have stability in the market for these long-term care policies. So with those, what we can do, and what we work with the underwriters, with the carriers, and we can actually kind of shop that policy around and find companies that are willing to bet on you, especially if you might have a little bit of dust on your medical on your medical history there. But we can definitely look at those options. And then if you don't qualify for a traditional long-term care policy, we can shop it around with the carriers that are offering those long-term care riders, so that maybe you don't qualify for the traditional long-term care coverage, but you might qualify instead for a universal or whole life policy that would allow you to have at least the rider on there and have some long-term care insurance available.
I think we should explain to people who would be looking at this what a rider is. And I worked in the insurance industry for a long time, and so it's second nature to me. But a rider is essentially a change to your policy. It becomes part of the policy itself to provide a benefit or coverage. And as I said, the most important part is it actually changes the policy to include that additional service that you're going after. And we talked about life insurance. What ages on life insurance are you looking at for prime time to get life insurance?
For prime time, honestly, I think as far as life insurance is concerned, the younger you are, the better. You can look at, funding for one, and here's one. it just came to my mind, that I'm seeing a lot of grandparents doing for their grandchildren. Everybody has seen those Gerber baby
Right.
commercials
Yeah.
with the grow-up plans and that sort of thing, and those are very popular, and Gerber is not the only carrier that offers them. You can actually take out whole life policies on your grandchildren, and you can own the policy as a grandparent and pay the premium on it, and those policies will accumulate a cash value. By the time the child turns 18, there may be $50,000 in cash value in that policy that can then be handed over to the grandchild to use maybe for college expense or a down payment on a new home, if they're getting ready to get married, because the child can actually borrow from that cash value and pay it back without any implications for taxes or interest.
That's an incredible advantage, too, is to be able to take that kind of money out of the policy. And you might explain the difference, like we've mentioned whole life and a couple of others. Explain briefly what those different types of policies mean, right? Having worked in the insurance industry, I worked mostly in the area of workers' comp and liability insurance and ran fraud units. And so I have a good concept of that. My experience with the life insurance companies is only what we have. And one case I took on where a young couple had bought life insurance. The husband was killed in a tragic accident, and his father, the husband's father, decided to submit a forged change of beneficiary notice after the son's death. So we took that in federal court and we won that one. But it would be nice if people understood the difference.
Yeah, absolutely. There are several different types of life insurance policies available. You have term life, which is probably the most popular and widely known type of life insurance policy. And a term life policy essentially is going to be your least expensive option, your kind of lowest level, if you will, on underwriting. And what you can do with those is you can buy them in terms, 5 years, 10 years, 15, 20, 30-year term policies. And what that means is you'll pay your premium every month for your policy. And if something were to happen to you and you were to pass during the term of that policy, that death benefit will pay out. At the end of the term, the benefit goes away. And those policies don't get any cash value accumulation in them at all. You're just simply paying to have the coverage. When you're younger, and I would say in your 20s and your 30s, and even in your 40s, it's a good time to kind of have a few of those nice sized term policies set up on yourself, because those are what we consider our high debt and our high earning years of life. Right. To use myself as an example, I have 3 different policies set up on myself. With my children as beneficiaries, I just bought a house. If something were to happen to me, I need a large cloud of money to pull from to be able to pay off what I'll be leaving behind. But as you get into your 30s and 40s, you might want to start looking at doing universal life or whole life policies. And those are policies that can accumulate some cash value in them to draw against if you were to need to down the road. And those policies are designed really to outlive you. So you would do a whole life policy and you would set it up to mature at maybe age 100 or 105. So that you would have it for the whole life or the whole rest of your life. And those will typically be a little more expensive than your typical term policy, but they do also typically incur some sort of cash accumulation in the policy itself, which means that you can borrow against the death benefit of the policy. So if you had, say, a $200,000 whole life or universal life policy that had a cash value in it, you could maybe borrow $50,000 from that to go on a trip or help your child buy a house or pay for a wedding or college expenses. But that would take $50,000 away from your death benefit. So if something were to happen while that loan was outstanding, then that would just be deducted from the death benefit.
And it is one thing is that we know for certain in doing estate planning is that the older you get, the more expensive this gets.
Yes.
I was talking with somebody the other day, and he said, well, I pretty well covered, I have $4 million in life insurance to take care of my family, but it's term insurance, and he, at his age, the next time that turns out, and he wants to get that same coverage, he's going to have a problem, because if he thought that the rates tripled, because the last time, when you get up to be 60, 70 years old, try to get a term policy and that amount of money, that isn't a payment that you can afford to do.
Correct.
I think, and other times when we use life insurance policies, we can do a life insurance trust for people. They're called ILITs, Individual Life Insurance Trust. And we can also use life insurance if you're worried about estate taxes, sometimes to pay the estate tax.
Absolutely.
And we'll get a second to die
Absolutely.
policies and things. And second to die just means that if it's a married couple, one will die first, and hopefully they don't die together. It's a hard thing in a family to lose two people at once. One dies, and then say 5 or 6, 7 years later, the second one dies. The policy does not pay until the second one dies.
Correct.
And those are sometimes, I think, a little cheaper, because in our society, women tend to live longer than men, and their rating is a little bit lower because they do live longer, so those policies may be a little more affordable. We're coming up on another break time. We'll come back and talk about some more of this right after we take a break here in a few minutes. And I'm going to take a few minutes when we come back to talk to you briefly about the California Senior Legislature and their need to have contributions from people in order to keep doing the work that they do. So we've talked a little bit about the life insurance. I think maybe when we come back, we should try to put this together in packages and how they work with what we do, what you do, and see how that all comes about. Okay, time for the break. Okay, Robert Howk with Howk and Downing. I'm back again with Amanda from Kuhtz and Diehl. I'm going to have you say what you do, because I don't want to put words in anybody's mouth.
I'm a licensed life and health agent. I work for a local agency, Kuhtz, Diehl Insurance and Financial Services here in Fresno. Our office is located right over by the airport, and we specialize in Medicare insurance policies for seniors, life insurance, long-term care, and final expense policies.
We will talk a little bit later in this segment about California Senior Legislature and their need, but one of the things I wanted to talk with you about a little bit more is life insurance. And final expense is one of the ones that you had in here. And this is something we feel is important. And we always ask this when we're doing estate planning. We always suggest to people, if they don't have a final expense policy, that they get one.
Absolutely.
From someplace. Do you want to explain what that does?
Yeah, absolutely. Final expense policies are, you've probably seen a lot of commercials that talk about the burial policies and that sort of thing, and that is exactly what a final expense policy is. You can get them in with death benefits as low as $5,000 and typically up to about $50,000 for coverage. And the nice thing about final expense policies is they typically have 3 levels of underwriting. So essentially just about anybody will qualify for a final expense policy, but they are specifically designed to pay out pretty immediate upon death. A typical life insurance policy may take 30 to 60 days for that full benefit to pay out to the family, and a final expense policy is really great for when you're just trying to get, again, those final expenses paid for, to pay for the services, to pay for the burial, and they are made to pay out typically within that week of that week of death. When your loved one is passing, and the last thing anybody wants to have to do is worry about where they're going to get the money to pay for those final expenses. When their loved one is passed.
It is something that we see within our office. When we're doing estate planning and when people have passed and people come to us. If you don't have an estate plan and you pass, it's called intestate, and not to worry. The state of California has a plan for you. It involves probate and can take up to a year, 2 years, depending on how everybody gets along. The old smothered brothers routine that mom loved you best, and people will say, my kids won't fight, and I say, yes, you're right, they won't fight until 30 seconds after you've passed. Then the fight will start, and that's when we see it. But if people will plan ahead, use your services or somebody that they can work with if they can't work with you for some reason, those final expense payments are devastating to the family because the mortuaries and stuff are going to want to be paid up front. They're not going to want to wait 60 days or longer until the life insurance comes in. Is it possible for them to buy this final expense policy and designate a particular mortuary for services and things? Because I know a lot of the, there's a gentleman, Jason Obernoff, in my Rotary Club. He's from Stevens and Bean, and they have policies too. And as near as I can tell, it's the same thing as that you're selling, except they know with their policy that it's coming and it comes to them right away.
Right. I do believe that you can set them up to pay that way, or you can set them up to go to a beneficiary. And you can also work with an estate planner or someone like yourself to set up how you want that process to go. I know I've personally seen too with some of the final expense companies where they will actually have a booklet, if you will, where you write out and you essentially plan your services, how you want it to go, and set the whole process up before the passing comes, to alleviate that pressure off of your survivor family.
This is something that, as an estate planning attorney, I cannot recommend highly enough that you do this. When we do estate plans with people, I don't sit down with you and do this. However, I do provide the forms and some guidance on how to do it and sit down and do it. And when we've had deaths in our family, even with all the kids really actually do get along together, that's kind of an oddity. But then it comes time to select the music. And, I thought Mom liked this piece better than that piece, or Dad likes this better than that, or I think it should be this. If you're really doing it correctly, you've planned all your music. You've planned, hopefully updated. We offer annual reviews with people who come and talk about things like this. So your old minister that's been around for a while is retired, somebody's taking over. We can actually change that in there at the time. And you can have your minister selected, the service, everything can be pre-done. And in my own family, when my mom passed, this had all been done ahead of time. All we had to do was make one telephone call. And it wasn't so much because Mom had a son who was an estate planning attorney, as it was somebody had talked with her and explained to her the need to have this done and done right, so that when that time came, it was just picking up a phone call. The grieving process is incredible as this happens.
Right.
And the last thing, if you've just had the shock of the death, and even if somebody was terminally ill or they died unexpectedly, it's still a shock. And to not have to deal with those type of things, to know that the estate plan is in place, to know that their final insurance policy is in place, that everything's taken care of, it's not going to be a comfort to the person who passes, but it is in a way, because they have the peace of mind of knowing that they're not leaving a mess behind for somebody else to clean up.
Absolutely. And I'm sure you experience in estate planning is the last thing anybody wants to, a lot of reasons they avoid the life insurance and the estate planning is nobody wants to talk about the fact that they're of their demise. And the truth is one day we are all going to die. And, knowledge is power, and, if we know what's going on and we put that into place, then we're protecting not only ourselves, but those that we're leaving behind.
It's so often I will hear people come in to do estate planning, and they'll talk about if I die. And then we have to have the hard realization meeting with them that says it's not if, it's a question of when, and everybody's going to die, It's not if, it's only a question of when and where. And then it's the mess that you leave behind afterwards that gets to be really bad.